Here we are on the Aussie dollar 15-minute time frame, and this is a low and tight flag that I've just managed to get into. As you can see, we have touched now 3 times on the bottom. We're just coming down for the third test, so we could actually see the breakout here. And you can see we've got a nice momentum move, a directional pole to the downside, and I've actually been monitoring this currency pair all day. I've been wanting to get short for a while, and this now provides me the opportunity. So what I'll do is just go out to the daily time frame. There was a shorting opportunity a lot further back, which I didn't take. I wasn't 100% happy with the way that everything had set up. But nevertheless, what happened is we had a lot of news the other day, and we had this big spike here. In fact, you can still see my workings out here. Sell here. So if the price was to come back up here, I would have sold a retest at 3/4 of the way up the candle. That didn't happen, but we can potentially play for a retest down at the bottom here. Though as we drop down the time frames, because I haven't got my stop above this big spike that you see, then I'm going to be playing for targets a little bit more conservative than that. So my targets are going to be this level right here. So let's drop to the 60-minute time frame. You can see that spike and then a lower close after it. And here on the 60, you can really start to see that sideways movement. It looks a very nice setup, this. We do have news out in 7 minutes, mind you. It could easily spike the other way. And so yes, here is the trade. So in terms of risk and reward, well, I'm a bit late getting to this. I've just been out for a bit of lunch, so right, okay, I actually do need to be another pip back there. Okay, 5 pips above the high. And okay, so let's make that the risk. And you know, there's a possibility here that news will just come out and spike me out, or it can just make it run down to the bottom. Who knows? Let's have a look. Green. So in terms of the risk, 14, and the reward 74. You know what? I am actually going to put my stop a little bit further back just to allow a little bit for the news. So that's going to make it a risk of 16. Ideally, I would have liked to have sold at the very top here, but it wasn't meant to be. I was out for lunch, so there we go. We'll come back and see the outcome of this trade. And we're back. I was asked by another trader, why is it that I'm selling this market when we're at daily structure? And we'll go to the dailies in a moment, but I thought it was a subject that I'll touch on, because he said to me as well, you know, look at your risk to reward that you've got here. It's like a 6-to-1, 5-to-1 or 6-to-1. And I tried to explain as best I could the way that I read price, the way that I look at momentum, and the way that I look at the candlestick formations and take the higher time frame into consideration. Now, I think it's quite important to understand that while we should all agree on structure, the interpretation of the smaller moves in the market and what the market is telling us may be slightly different as to how we actually interpret it, and some of that will also come down to the amount of risk that you're willing to place on a trade. So for me, a 15 pip risk here is well worth a reward of 74 pips, but only if the market is telling me that I have greater than a 50% chance of this coming off. In actual fact, with a risk reward like that, I only need the market telling me a 20% chance, but I believe I have a better than a 50% chance. And what I want to do is remove the orders and just run through, why I think that is. And I talked in the video here that we had this very big spike, clear rejection candle. Nothing is ever a given in trading, but it's looking like that we're going to finish with quite a big bearish candle here. That would mean that we would, you know, we would want to be sellers instead of buyers in this type of market. So as we drop down the time frames and we go to the 240, this is what I really paid attention to. Look at this massive spike here. That spike was followed by 2 4-hourly indecision candles, and then boom, a big bearish candle. It actually closed right below this entire level, and boom, another 4-hourly candle, once again closing below the previous candle. So we're having quite a bearish run here. Now this 4-hour candle is going to close in 3 minutes, and I would have liked, of course, to have seen it come right down to here and close below, but we haven't done that, and you have to ask, why is that? Sometimes we don't know. Sometimes it's to do with structure, even handled numbers. Sometimes it's just a hold before we break through potentially some structure. If we put a structure line in here and zoom out, you can see that there isn't really a structure level. We've actually already closed beyond this level here, so there's only a minor level of structure. So what could we be doing? Well, we know that we had an awful lot of selling pressure here. Then we had, I wouldn't call them momentum moves here on the 4-hour, but look at the size of the candles. They are bigger than the previous candles. Let's go to the 60-minute time frame. Now you can look at that candle there and say, well, this was a momentum candle. It is clearly a bigger bearish candle than anything else, and it just violated the entire level to the left. And what happened when we violated that level? We put in the a low and tight flag, which has the highest win rate out of any of the flags, and typically occurs after a momentum move, typically when we're in trend and we're either very directional or start becoming very directional. And so what happened is the market came down, it hit what would have been my projected targets of the 127 fib, and we've seen a bit of a rejection. Now, am I worried at this stage? No, I'm not. The fact is that we've now broken the channel of this flag and we've made our way down. Now, what I want to do is just bring over another chart and give an illustration of what I mean about us potentially, we're now potentially looking at getting into a heavy trend. Of course, we never know what the market is going to do, but based on what happened previously, and here's the pound dollar, look what happened here. We were in an uptrend, and then boom, a big reversal and a big momentum move lower. And look what happened when all of a sudden we changed trend. We put in a flag pattern, a very shallow one, and boom, momentum move lower. We put in a high and tight flag, boom, move lower. Then what happened? We put in another low and tight flag, and then we put in another low and tight flag, and boom, a move lower. Then what did we do? Another low and tight flag, and boom, move to the downside. And then what did we do? Then we had a change in trend. And my bias, as I've talked through there, was bearish based on the massive rejection candle we had. We closed in the lower 20%, followed by 2 4-hourly lower low, lower closes. We've put in a low and tight flag. You can see there's 3 of them here, one after the other. Momentum move, low and tight flag, momentum move, low and tight flag, momentum move, low and tight flag. Now, of course, we don't know that that's what's going to happen, but based on what I'm reading, and my overall bias is short anyway, this is a good setup for me, and I'm quite happy to be in it. And because I believe I have a greater than a 50% chance of this trade going on to win, and I have a ridiculous risk to reward, I'm quite happy if I get stopped out, because you know I only need to win 1 out of 5 or 6 times to earn my pips back. So no idea what's going to happen with the trade. Of course, we never know that, but we're still in the trade and we'll wait and see. And it would be nice if very shortly, boom, we got another move lower, sideways movement, boom, another move lower, and we will come back to see if that actually happens, or whether or not we enter trend, or whether or not we struggle to get down there. There's one thing for sure, is that this trade will either win or lose. Okay, we will come back and see the outcome of this. And we're back for the last part of this video, and we have an outcome. And what I want to do is just talk you through, just for a minute or so, the outcome of this trade. Now, I actually made a couple of little errors here. The first one is when I've watched the video back, I actually had my stopper not right at the top here of the red box. If you check the video, I was actually a pip or a pip and a half below it, so I noticed that. But also, I'll come to the second part in just a moment. If we go to the right, you can actually see, boom, we've just come down to hit those profits, and I obviously didn't get these profits. 71, I think it was a bit more than that, I think it was 74. And the risk, just as a reminder on this trade, well, I was there at maybe 16 pips, something like that. Okay, so we can clearly see that the everything was correct on the trade in terms of the entries, targets, stops were even correct. However, I did make an error, and this is judgment really, but as you can see, if I put the crosshairs on here, you can actually see that we never actually came up to hit my would-be stops, but I did have them in the wrong place. Again, I was a pip and a half below where I should have been. But regardless of that, when I'm looking at trend continuation trade like this, I always have my stop further back. And let me give you, for example, if we're in trend and we see a back pattern that sets up, my stop would for a back pattern usually go at the 113 fib. However, when in trend continuation, I always put it at 113 and a half and check where that lines up with structure and even handled numbers. I always put my stop further back for trend continuation because the risk to reward is there, and you will find time and time again that at some point structure will not be adhered to, which is here. You can actually see here we just closed above it before rallying down, and in this instance you're just best off having your stop that little bit further back. Now if I used a 20 pip stop loss, I still would have had a 3.5 to 1 risk to reward. And so again, my stop was in the right place based on the pattern, but because of trend continuation and I know the way price works, it will do what it can to stop you out. And that is what happened in this scenario. So I've missed out on 71, or I actually think it was 74 pips there in the end. But the fact is that I'm very happy with the outcome because look, I was right, the analysis was correct. So that's something I'm going to take away, and I'm actually, one of my rules now is I'm going to watch this video 10 times over to make sure that this stays in my head, because as I say, it does for advanced patterns, bat ciphers and Gartleys, but because I use this breakout pattern as the entry, the low and tight flag, that rule just slipped my mind. It just slipped my mind and I never checked it, and it's just one of those things. But there we go, I'll watch this 10 times back over and make sure that that's grounding to me for the future. As usual, if you do like the video, I know this one's quite long, but if you do like it, please go ahead and subscribe, and of course give it a like if you do like it.